Hey everyone, welcome back. Today we're going to talk about one powerful innovation that enables banks around the world to not only process your transactions faster, but also connect seamlessly to DeFi or decentralized finance. I'm of course talking about Chainlink's cross-chain interoperability protocol or CCIP, and how it's helping the biggest financial institutions in the world, like one of Australia's biggest banks, ANZ, bridge traditional finance with the blockchain world. So let's break it down. Let's start by talking about why banks are jumping on the blockchain train. The answer is pretty simple. Security, efficiency, and cost savings. Banks deal with billions of dollars every day in transactions, and traditionally these transactions go through multiple intermediaries, each adding extra delay and extra cost. Now, blockchain eliminates the middleman, allowing for quicker processing times and significantly lower fees. Blockchain also offers an unprecedented level of transparency. Each transaction is recorded on an immutable ledger, making fraud harder to pull off. At the same time, enhanced security features built into blockchain protocols ensure that sensitive information is protected. Some banks are developing their own private or consortium blockchains, allowing them to keep control over their data, stay compliant with regulations, and tailor the technology to their specific needs. They're not just adopting any random blockchain out there, they're creating blockchains to fit their specific business models. And this approach ensures that they have the best performance for their specific use cases, whether it's processing loans or settling payments or managing assets. And you might be thinking, if every bank has its own blockchain, how do these systems talk to each other or to other public blockchains like Ethereum? Well, that's where Chainlink CCIP, again, cross-chain interoperability protocol, comes into play. Let's break down how ANZ Bank, for instance, is using this tech to push the boundaries of what's possible in finance. Imagine ANZ Bank wants to tokenize real-world assets like real estate or securities. When we say tokenize, we mean that these physical assets are represented digitally on a blockchain, similar to how cryptocurrencies represent value. But ANZ isn't operating in a vacuum. They're an entire ecosystem of decentralized finance protocols running on public blockchains like Ethereum, which offer new ways to leverage these tokenized assets, such as using them as collateral for loans, right? So here's where things get interesting. ANZ's blockchain is private. It's built to serve their needs and stay compliant with regulations. Ethereum, on the other hand, is an open blockchain, open to literally anyone. So how does ANZ's private system communicate with Ethereum for something like a DeFi loan? This is where CCIP steps in as a secure conduit between these two different blockchain environments. CCIP allows the tokenized assets on ANZ's blockchain to be transferred or used on Ethereum without losing any security or data integrity. So how does this magic happen? Let's say ANZ has tokenized a portfolio of real estate properties, and they want to use those tokens on a DeFi protocol on Ethereum. How does Chainlink CCIP facilitate this transfer? Well, first, in simpler terms, they check on what's on ANZ's blockchain, the tokenized real estate, matches what needs to be reflected on Ethereum. This ensures the data is consistent across both platforms, which is crucial for maintaining trust and security. Once the oracles gives the green light, smart contracts on both blockchains kick in. These smart contracts handle everything from transferring the tokens to ensure that both blockchains reflect the update ownership or asset value correctly. Imagine ANZ is using those tokenized assets as collateral for a loan in the DeFi space. Chainlink CCIP ensures that the value of the collateral is consistently recognized across both ANZ's private blockchain and Ethereum's public one. What makes this process seamless is that Chainlink's decentralized oracles feed real-time data such as asset valuations or market conditions into the smart contracts. This means that financial decisions are being made based on live and accurate information. Now, why is this important? This kind of cross-chain interoperability is key to unlocking the full potential of blockchain technology in finance. Banks like ANZ are not just experimenting with blockchain, they're finding ways to integrate it into their core business operations while still ensuring compliance and security and privacy. By using CCIP, they can interact with public blockchains, tapping into the DeFi space without compromising the integrity of their private systems. Now, this is a big game changer. Again, it sounds cliche, but it's really bridging the gap between traditional banking and decentralized finance, allowing these financial institutions to offer new services, better services, to access new markets and leveraging the full power of blockchain without leaving behind their original foundational principles. So in summary, CCIP is setting the stage for a more interconnected financial world, and with ANZ Bank leading the charge, we're seeing how traditional finance can merge with decentralized platforms like Ethereum, creating more efficient, secure, and innovative financial solutions. It's definitely shaping to a very interesting future where, Chainlink CCIP is at the heart of this transformation. So I hope you enjoyed this video. I'll see you in the next one, and yeah, go have some fun today. I'll see you later. Bye.